Jairam Sampath, whole-time director and CFO of Kaynes Tech, joins in. Good morning, Mr. Sampath, and I'm very sorry to have kept you waiting, but we were talking, or rather in a conversation with Casey as well, so both significant in terms of news flow this morning. To start with, I believe there's been an inauguration of a new facility in Hyderabad. You want to walk me through this facility, whether you've already got clients or waited? I believe you're just awaiting the government's approval on large part of the business to kick off.
Yeah. So the Hyderabad facility is focused towards the EMS business. And we, of course, have a lot of pending client orders. And this is right now aimed towards making it a power distribution equipment factory, including smart meters. And it's going to be a very large facility. This also is part of our ability to put larger facilities, starting with Chamarajanagar. So this is already operational. It was inaugurated this month, and we hope that this will start working with the full capacity in a couple of months' time. And this particular facility is an integrated facility. It's got plastics molding. It's got all the surface mount machines. It's got all other automation in assembly. It's got robotized handling of material. AGVs are there, and so on. So this is going to be a state-of-the-art integrated facility. And of course, we will use manpower to make sure that value-added jobs are there, programming is done, and making sure that the production efficiencies, quality control systems, and all of that works through.
Sampath, so just to understand this, you've got the approval from the government, right? Because I know there was some confusion on the location. First it was Gujarat, then Telangana. So the approval has come through?
Yeah, so the approval is in the penultimate stage. Obviously, that you're talking about this semicon business.
Yes, Kaynes Semicon, the OSAT business, yes.
Yeah, that's likely to be in Gujarat. And this facility we had earlier contemplated on putting other businesses too. But later on, we decided that it makes sense to, since being a large piece of land available there, makes sense to expand our EMS business itself. So we have now put our EMS business into this facility.
All right, Mr. Sampath, good morning. Tamanna here, and excited to talk to you about the kind of wide range of things you're doing. But I just want to spend a second looking back a little at Q1. And in Q1, where industrials, including EV, has really done very well, and which is why you had a great quarter. There has been a bit of a slide in automotive, railways, aerospace. Is this because of a seasonal impact? Do you see some of these segments coming back in Q2 and the rest of the year?
Yeah, so the Q1, as it is a lean season actually, typically, and it's about 15 to 16% of the whole year. And when we look at the other quarters, obviously, progressively it increases. Q2 becomes around 20-25%. Q3 is again 20-25%. Q4 will be 35 to 40%. And on year-on-year growth, I think has been pretty good. The industrial, so since we work on an order book, obviously we will always have orders to execute. Sometimes the blended margin comes down a little bit because of the different sectors that we execute or get schedules for. So we expect this entire thing to probably improve from Q2 onwards when some of these businesses in relay signaling, in aerospace, defense, IT, all of these things start improving. And of course, our industrial and EV and also the automotive, they still remain a strong sector. So blended margins are also likely to go up in Q2, Q3, and thereafter, of course, Q4 will be a fairly good quarter.
Blended margins would go up to what extent? You were at about 13.3% in your Q1. So say by your annual margins, where do you expect this to go up? And like you explained, Q3 and Q4 is where things really fire up.
So taking a consolidated look at what we are going to execute, about 15% will be the EBITDA margin by the end of the year. Okay. And we already did about 3,000 crores, and I think we are well on our way to do that number.
I'm doing a little bit of a detour and going back to your OSAT business, because that could, I think, be an important trigger for the company, at least in the next 6 to 12 months. You talked about the expected production that's going to come online and the clients that you've already signed up. You want to talk to me about those, because I know there are a few significant ones that have already been committed to you in this, on the semicon space.
Yeah, so semicon space, I am not at liberty to take the names because of the confidentiality reasons. They are all global companies without their consent. But suffice it to say that over time, of course, there have been a delay of 3 months in actually getting the approvals on hand, and we are expecting it any time now. But during that time, we have strengthened our case for advanced packaging. And now we have a lot more clients in the area of advanced packaging, so that we build a niche for ourselves in the emerging areas of silicon photonics, compound semiconductors, and other things. So we follow a different path than most of the other OSAT players who are probably setting up. We limit our exposure to legacy packaging businesses to about 25%. 75% of the business we expect to do in the advanced packaging, which is going to sustain in the long run, even post the government subsidy regime, and still become viable for investment. So we are very mindful of the fact, of course, our journey has been one of learning. Obviously, we came in as an outsider in the semicon business. But today, our understanding is somewhat better, somewhat superior. And we have also understood what the partners can do, etc. And what is it that a company like us have to plan for the future. So we have already got a plan for next, let's say, 5 years or so. Right. And so we hope that we should be able to start revenues in this business by the fourth quarter of FY26 and earlier. We do a little bit of crash course on our construction and other things. That,
right. Right. Yeah. Sir, just so, like you said, right, this will start turning revenue accretive. It's the advanced packaging business and the OSAT as well. And I know it's tough to call out in the next quarter. So between now and, say, the next 2 to 3 years, how much revenue contribution can we expect from Kaynes Semicon across the verticals that you talked about?
Yeah, if you take a 3-year time frame, let's say FY28, a little longer than 3 years, we should be able to do about 1,500 crores or so of this business at the minimum. And if we get our act together a little early, and if all the things go as planned, in each case, probably we should exceed that number too. That is as far as the Kaynes Semicon's business is concerned.
How have you funded this project of yours? I think the money that you look to spend is about 6,500 crores. That's significant.
The total capex in the first stage, I don't want to confuse with phase. First stage is 3,000 crores of capex, which has been put up to the government for support on subsidies. And thereafter, we also promised to the government that another 1,000 crores of investment we will do. And of course, in perpetuity, in this business, of course, a lot more money will go in. That would depend on what kind of business that we get in, and also what kind of customer pool is there, which we expect it to be strong, but it's too early to call that. So we want to get the first 3,000 crores of capex, which will yield around 3,000 crores of revenues by, say, FY30 or so. And in the meanwhile, somewhere down the line, maybe FY27, FY28, we will increase the capex amount. And so that this business will also generate, when it's doing advanced packaging, it's a fairly profitable business. It'll also generate its own cash for investments. So maybe it generates 300, 400, 500 crores a year. And once the sizes go up, of course, that number can also go up. So we are looking at it in the long term, and we look at it as an integrated part of the integrated EMS business.
Mr. Sampath, just want to talk a bit about the railways part of it as well, because that portion and the work that the company is doing on Kavach, how much of an upside are you seeing there? Q1 would understandably be quiet on that front. You were in the middle of an election cycle, etc. But now that we've seen budget allocations, focus on safety, what is the outlook for this segment of the business?
Yeah, so there are different views on this business in terms of government's infrastructure spending, whether it's muted post their elections and so on. But we don't see any such intention. Of course, the first quarter was a bit of a loss because of the election process. But I think the schedules have started coming in. So we expect it to get into a normal routine by the end of the year, and FY26, FY27, etc., when our Kavach program also kicks in. Railway obviously will become a significant 15% of our revenues. by say FY26 and FY27.